Will the FOMC crash the market this week, or could we be looking at a rip your face off rally as the market looks to carve out a low from the recent 10% decline in just about 20 or so calendar days, the fifth fastest 10% correction from all-time highs ever on the S&P 500? We'll get into some dealer levels here, and as well what both sides here want to see going into early next week, and a few stocks, key stocks to watch that could definitely move the market here. It is obviously Sunday night here, March 16th, and recording this a little bit early, but this will be released then. Again, if you like the video, don't forget to give me a like, thumbs up, subscribe to the channel, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. But anyways, let's get into it here. So we obviously had this pretty big slice here on the S&P. And right now, personally, I'm in the camp here that we're looking for a bounce. And we have, we thought we would have some sort of relief here the last two Fridays. We obviously did not see that, but I think now, given the size of the decline and given the makeup of the market and how we traded on Friday, I think it's likely that we do have a low in place here based on the gap up, the sell on the algo sell at 10 a.m. on terrible data. In fact, I said to members first thing in the morning, was like, the best thing for bulls here is the data is terrible and you get to buy the dip, because now you're going up on bad news, which tells them, tells us as traders that the market has now discounted a lot of this the negativity. So if we get more negativity, more tariff talk, the market can still shake that off here. Why we have a lot of important quarterly flows here, OPEX flows coming into play. We've talked, ad nauseum. One of the things I've shared many times over here is taking a look at the PC GEX, right? Just a historical average here is, between 120 and, 0.88, on either side. And we've been, about 2 weeks here of above 2 every single day, with exception to one. And we had a few days where we were almost at 3-to-1 dealer exposure puts to calls. That is insanely high. One of the reasons why we're coming down, one of the reasons why volatility is coming down and the markets are coming back up here. You can see VVIX getting slammed back below the 110 area, and this has had a 100% retrace essentially. That's Feb 20 right there, right? And that's your high, 218, 219. So we've essentially retraced that. Why are we seeing that? You're seeing a lot of decay. I can show you some of the levels I've updated. I'm sure they'll update a little bit more on Monday morning, but these were all put supports, so we were deeply in a negative gamma. They're green now for call resistance. And the market here just kept pushing through there. We had levels here, and you'll recall earlier in the week on, I think Monday or Tuesday, I said we could maybe go to, I might even have said it on Friday, but I said we could maybe go to 545. There's a reason for that. That was the lowest amount of significant dealer interest I saw hedged for the next week or so. After this past Monday, and into Tuesday, Wednesday, I started seeing 540, 530, 525. There's even some sitting down there at 500, and that's marked here. Why is this significant? Because it shows this panic here as we got towards the lows. And who's on the other side of that trade? Of course, the dealer. They're shorting stock, but most of these dates here have 0 to 5 DTE. So you're going to have to go down. This is the fifth fastest correction ever in the history of the market. So you're already down 10%. You're going to have to drop another 60 points. You're going to be down 20% in a month. Has it happened before? Yeah, I mean, it happened in 2020, but that's really kind of the only, that and maybe 1987, the only other historical references. So that left tail is very unlikely. So what happens, because it's going to have to happen by, Wednesday, right? You got Vixpiration coming up, and then, if we're down into the Fed, I mean, I can't imagine Powell's going to slam the hawk hammer down. So you have, 2, 3, 4 days to do this. You panic bought all those puts. And now dealers, as we went sideways since Monday, it feels like we were down big for the week, but we really just closed, we were down Monday and we closed flat after that. Decay. So all those OTMs starting to rapidly decay. We talked about that on Wednesday with the VIX, And we saw that decay come in, and we're seeing that now. So I'm still favoring a bounce for many reasons. I don't think there's a consensus of traders looking for a bounce. There's a lot, but there's plenty of people I saw that were saying, I'm holding my puts into the weekend, we're not bouncing. This is, crashing down. And maybe they do. But for bears here, this is what you want to see Monday. You need a gap down, and you need to get down to 540 very fast, like preferably Monday. So they're banking on the same playbook 3 weeks in a row. Friday rally, Monday slam. Friday rally, Monday slam. So chances are, again, I think probabilities here with this discount here, we're likely going to see some type of a rally next week. But, Spider's still not out of the water. We've got to reclaim 570 to really kind of change technical positioning here, and kind of neutralize some of this, trap some of these sellers down here. But that's kind of where I'm leaning right now. I think we can go to 580. I don't think, I'm not saying we necessarily go straight there, but that would be a minimum, 50% retrace. Every bear market has a 50% or a 618 retrace. A lot of bears over the week, I've talked to the last week, are acting as if we're never going to rally again. We're not going to bounce ever, and that's just the end of it. So probabilities, and maybe we go down, maybe we do, but then you're going to have to keep breaking these levels, because the more they decay, the more, the less time you spend out of the money, the more decay is going to come in, and the more oversold we're going to get, and you're just going to get a natural reaction. Again, if we are coming down, I can't imagine Powell really slamming the hammer down. Lastly here, a couple of stocks to watch, especially if we gap up Monday and they reverse the script, right? They're not going to make it that easy. If it gets that easy, if it's that obvious, it's probably not going to happen too many times. But XLF here, so for bulls here, you want to see a gap here Monday. That's a very nice looking island, and they saved this trend line by the end of the week. I like the third hit. I like the pierce below it. You have a similar look on IGV. So an island down there, you've got that on IWM as well. These are key sectors here that are going to need to push higher, and you can see it on the triple Qs, of course. Back above, 480, let's say 484. That traps all sellers from last week. So we have this island here. If bulls can get a hold and push this up, we could see a little bit of a squeeze here. But I think best scenario here for bears is it just keeps going down Monday, just straight up gap down, Black Monday situation. Otherwise, if we're going sideways to neutral into FOMC, I know everybody's going to talk about, it's a bear flag, but I'm telling you that the flows here are there. You're going to see a massive amount of put decay. And right now on the 4 hour here, this looks more closer to a Wyckoff than anything here. So keep an eye on that as well. Keep an eye on IGV, XLF, QQQ, and IWM there. And we'll definitely see. So anyways, you guys subscribe to the channel. Come find me on carnivoretrades.com. Have a great rest of your weekend, and I will see you guys all tomorrow.